Welcome to the Leaders in Payments podcast, where we talk to C-level leaders from across the payments landscape. We'll be discussing the products and services that impact the payment space today, as well as trends and predictions for the future of payments. We will also hear stories from our guests about their journeys to the top.
The type of investors we were able to attract into the company and the kind of talent. We were very fortunate in our ability to attract a great talent. And I have to say, I would like to say that, we attract great talent because of my ability to sell the company to talent. But I think a lot more than that, it's the mission. It resonates with a lot of people. We're doing very well, but doing something great, something positive.
That was Itzik Cohen, the president and CEO of Payzen, and he is our special guest this week on episode 157 of the Leaders in Payments podcast, and I'm your host, Greg Myers. So how does a professional basketball player become president and CEO of a Fintech payments company? Well, he's 6'8", with a passion for solving problems and a love for transformative technology, and he is on a very bold mission to revolutionize the healthcare payments industry. The mission-driven goal of Payzen is to underwrite each individual customer into a payment plan they can afford in order to maintain standard healthcare. According to Itzik, the U.S. has a revolving balance of approximately $330 billion in annual unpaid medical bills. Their focus is on elective procedures, and the business model is the industry leader in care now, pay later healthcare. Tune in to hear more about Payzen and how they are managing a 5,000% projected growth rate and where Itzik sees the industry headed in the next 2 to 3 years. We've got a great episode ahead, so let's get started. Hi, Itzik. Thank you for being here and welcome to the Leaders in Payments podcast.
Thanks, Greg. Great to be with you.
So let's dive right in. If you don't mind, tell our audience a little bit about yourself, maybe where you grew up, where you went to school, where you currently live, a few things like that.
Well, I grew up in Israel, if you can tell by the accent. After 25 years in the United States, I still have some of an accent. Grew up in Tel Aviv. A little bit of a fun fact about me. I was a professional basketball player. I am very tall, 6'8", so doesn't come through in a podcast, but yes, I played professional basketball in the EuroLeague while I was learning computer science and math and Tel Aviv University, and made it to the United States, more specifically to the Silicon Valley in 1996. So that's where I'm from.
Okay. Well, let's talk about the company Payzen. If you don't mind, tell us a little bit about the company.
Well, Payzen is a company that has a very bold mission and solving a real problem in the United States. We feel like the finance around healthcare is just totally unsustainable for patients and for medical providers. The way the process of consumerization of healthcare, where more of the payment responsibility has shifted to the patient, is just not sustainable. Most people do not have enough money to afford those big payments. It comes in form of deductibles and co-insurance fees, co-pays. What Payzen's thesis was, most Americans, most people are decent people who would like to pay their bills. If you give them an opportunity to break down this bill to an affordable payment plan or a way for them that's more affordable for them to pay that big balance. And what we're trying to do is use all of our experience, and the team has a lot of experience in fintech and originating a lot of consumer credit, bringing very innovative products to the market. And we took all of this experience and basically used a lot of data to underwrite patients into payment plans they can afford and making healthcare more accessible and more affordable for them. The problem of healthcare affordability doesn't just stay within unpaid medical bills, which is a big problem, around $330 billion a year in the United States. It's massive. But it's also shifted now to what we call just pure access to healthcare. Essentially, people do not go to the doctor because they don't want to pay for their deductible. So people are putting off care. If it's not urgent, they don't do certain procedures, which we think is just going to lead to very poor clinical outcomes, poor public health. And we're trying to make sure that our products are going to be available to as many Americans as possible to encourage them to seek medical care and know they can afford it. Because our North Star is we approve 100% of patients. People who want to pay will be able to pay using Payzen. And we never charge interest and we never charge fees. So that's the mission of Payzen. We are leading a revolution we call Care Now, Pay Later. It's inspired by Buy Now, Pay Later. I'm sure that you've heard that term hundreds of times, especially in this podcast. So obviously we are inspired by that market, but we created a product that is a lot more suitable for healthcare context rather than e-commerce, like a firm who's doing a wonderful job making financing available to consumers across the United States and making it very easy for merchants. We're doing the same thing in healthcare. It's just the problem that healthcare is a lot more complex when it comes to payments and affordability.
And are you just in the US right now?
We are only in the United States. This problem is not unique to the United States. Healthcare is becoming more expensive across the world. Even in countries where there's nationalized healthcare, there is still a private element where people will need to pay for out of pocket for certain things. But we're currently focusing on the United States. When you're thinking about the size of our market and the size of the problem, household expense for medical products and medical services in the United States out of pocket was $1.2 trillion last year. So it's a massive market to go after. It's a massive problem to tackle. And we're trying to focus on our core market, which is the US.
And when you say healthcare, can you explain, does it include dentists, like every kind of doctor? I mean, are there certain limitations or basically anything?
That's a great question, Greg. We are focusing on non-elective procedures. What I mean by that is whether it's dental or not is not the real differentiator for us. It's whether it's needed for medical reasons or is it a cosmetic surgery that you're doing for convenience. So we're trying to focus on basic healthcare needs and non-elective procedures. So not restricted to any field, just the context.
Okay. And then you mentioned using AI. Is that part of the underwriting process? How do you use AI?
Yeah, that's a great question as well. We are using AI in two ways. One is to underwrite each patient to a payment plan and a flexible payment they can afford. So essentially, we're using tens of thousands of data points and attributes from credit bureaus and other alternative data sources, including from data that is shared with us by their providers, medical provider as well. And we're trying to underwrite patients in order to maximize their repayment success, meaning we want to make sure that we put you on a plan that we know you can afford. So our focus is cash flow. What's your liability every month? What is your income? Confirming your income. Doing all of these things automatically without asking you questions as a patient or a consumer is extremely difficult. So we're focusing on, first of all, underwriting patients into payment plans they can afford. The other factor in our AI and machine learning that we're utilizing is trying to understand predictive loss rates per customer so we can actually pay the providers their fair share.
Okay. And is the scenario that a consumer signs up for this at the doctor, or how does that sort of implementation happen?
Yeah, that's the complexity in healthcare. I mean, what's easy about e-commerce is that the checkout flow is pretty standard, across the board. Essentially, you're putting something in a basket, and when you check out, you're getting all kinds of payment options, including financing, if that's what you want. Healthcare is very different. There is no one single checkout process, really. Conversations about affordability starting before your procedure, after your procedure, when you get a statement, or when you don't pay a statement. We're trying to address every step of the way and be in front of patients and enable the provider to communicate those payment options, even when they come into the office. Essentially, if there's an out-of-pocket that is large, there is a way for the provider to invite the patients to pay this way using Payzen. If a statement has been sent already and you need help paying it, you're invited to pay your bill that way as well. So we need to address all kinds of different points in the cycle of care: pre-care, post-care, post-billing, and collections. So this is the complexity of our integration. And this is why we needed to build a specific platform that addresses all of these use cases.
Okay. And then do you go to market through like a direct sales force, or do you have partnerships, or both?
We're doing both. So our core market is hospitals, health systems, community hospitals, rural hospitals, and very large physician groups. We're doing very well signing them up on a direct basis. We have a great sales force and analysts who are showing providers exactly how much more capital or how much more cash they will be able to obtain in the first year alone. It's a very quick ROI, and we're doing great there. And of course, we're growing with partners as well. So we're integrated as a platform. Essentially, you'll be able to use Payzen if you use Epic. Epic is one of the biggest companies that are doing healthcare IT, including payments. They have an app store. We're integrated into their app store. So if you're a medical provider who uses Epic for payments, for example, you'll be able to plug Payzen in as an app, and we'll be able to use it seamlessly within your Epic experience. This is the beauty of basically building a platform rather than just a product.
And then the magic question, how do you make money?
Very good. I mean, essentially, we're taking a percentage as a fee of every dollar we process, and it's very similar to what your credit card fees will be. So if you think about it, it can be 5% or 3% of the dollars we process is basically our fee.
Okay. And what would you say differentiates your company from other competitors out there?
Well, there's a lot of moats that we built around the company, starting from our product. I mean, I don't know of a product that approves 100% of patients, pay the provider a day after enrollment on a non-recourse basis, meaning if we don't get paid along the way, we eat the loss. So we have a high confidence in our ability to underwrite people the right way, and charges no interest or fees. So this is very unique by itself. But our whole technology forward approach, which is seamless integration, 21st century type of experience for the user, and full transparency to the provider when it comes to performance of the program, full integration into the other IT solutions that they have currently, removing the burden really from the provider, medical provider, to do anything that is related to IT and make it a seamless experience are one of the key differentiators. But on top of that, we're building a very unique data asset that has to do with payments in healthcare. I mean, if you're looking at consumer lending, for example, you can go to one of the bureaus today and buy some kind of a retro set of credit performance and try and build a model. A lot of lenders do that. But because there's no reporting to the bureaus on medical payments, what we do right now is creating a very unique data asset that we'll be able to use as an advantage down the road when it comes to having a much more predictive model and a better underwriting for the patient.
Love the care now, pay later slogan that you have. But a question about that. So buy now, pay later is typically 4 or less installment payments. I mean, is it similar model as that?
No, I mean, we do have 3-month terms and 6-month terms, but we also have 60-month terms. Essentially, we're trying to make healthcare affordable to as many people as possible. In e-commerce, if you're not going to buy that big screen TV, that's one thing. But if you cannot afford a very important procedure, that's a whole other ballgame. So we need to have enough flexibility into our program that will fit as many people as possible and make them able to afford the services that they need. So I would say that our average term is around 24 months.
Okay. Where do you see, and you can answer this sort of through the lens of maybe healthcare payments, but where do you see the industry headed in the next couple of years?
Well, I think that the consumerization trend in healthcare is not going to stop. And what that does is creates a need for the provider to really extend financial products so patient can actually afford care. Because essentially a lot of patients, most of Americans right now, have health plans that include some kind of a deductible. The average last year per family was around $4,500. Most Americans cannot afford this. The result of that is obviously very poor collection rates on the patient responsibility after insurance. What we think will happen is that more and more providers will have to use products like Payzen that will allow them to extend more services, improve their finances, and take them out of the finance game and focus them on providing care, which is what they're good at. So we think that, it would be the same analogy as why doesn't Peloton provide credit to their customers themselves? Well, that's not what they're good at. They're good at making a great service with stationary bikes. And they're using a firm who is great at what they do. I think that the same trend will happen in the healthcare. Products like Payzen and platforms like us will become more and more available to providers and will take providers out of providing finances on their balance sheet and provide a much better experience for their patients as well. So I think affordability problems are not going to go away, and the need for products like Payzen are only going to need to increase. I think that our future products, which I cannot get into details with now, but in 2 months, we're announcing a new product, will address more use cases in a much more convenient form factors that people can use multiple times. So having more and more of these unique products that will allow you to finance your out-of-pocket expenses in a way that will give you a peace of mind that you know you can actually afford your care, I think would be a major market in the United States. Like I said, it's a $1.2 trillion a year market. It's pretty massive.
Yeah. Huge market that don't think the need that you're filling is going away anytime soon.
I don't think so. Yeah, I think I would have to agree. I think that the cost of healthcare has shifted to the consumer at the end of the day, to the patient. And we need to help patients afford care. Healthcare is, yes, affording big ticket items in e-commerce is very important. And I think it makes credit more accessible to people who need it. And Buy Now, Pay Later did a great job there. But I would say that Care Now, Pay Later is more basic when it comes to the needs it serves. I mean, it's serving a much more fundamental need in the U.S. economy.
Yeah, yeah. I can remember times I've gone to, and not that you're not obviously trying to solve the U.S.'s healthcare problem, but even going to the doctor, and oftentimes you leave and you don't know. I mean, sometimes you just leave without paying anything. You don't know how much you're going to be billed or when it's coming. And did insurance cover some of it, none of it? I mean, there's so many challenges around that part of the business, but giving people this option, I think, is a huge value add.
Yeah, I mean, Greg, you're so right. I mean, essentially, this is the problem spot on. I mean, there are some rules now called price transparency, which puts more burden on the provider to give you a price that is transparent about what your out-of-pocket is going to be. And I think that's a great step in the right direction. The problem here is that now that you know how much you're going to have to pay, you're going to need a solution to afford it. So the other side of the equation is, well, you're going to pay $2,500, Greg, but here's how you can afford it. So this is the type of conversations you'll see in the future at the doctor's office or before you do a procedure. Not only you'll understand your costs better, which is, again, it's great, but you'll understand that you can actually afford it because you have a convenient way of paying that.
Yeah, I love the value proposition. Well, let's switch gears and talk a little bit about you. So tell us maybe your journey from the basketball player to the president and CEO of Payzen. Tell us a little bit about your career journey there.
Well, I was very fortunate when I came to the US to be very early in a company called WebEx Communications. So I was part of the early team there. That was an amazing experience of growing a company from almost nothing to going IPO in 2000. And eventually the company got sold to Cisco in 2007. And obviously joining a startup in such a young stage requires you to do different things. So I was exposed to a lot of different sides and aspects of the business. Following WebEx, I started a company called ClipSync, which was trying to do what we call today watch parties. And that was fun times. I mean, we were playing in the media. Essentially, we were taking a WebEx type of experience and moving it into the entertainment world, trying to create more of an interactive viewing experience. And again, I was very fortunate to join Prosper Marketplace in 2012. And what we call today Fintech 1.0 was early days of peer-to-peer lending and then shifted to marketplace lending. We had tremendous growth in the company. And by the way, as part of that, we acquired a company called American Healthcare Lending, which exposed me firsthand to the way American healthcare works, especially in payment. And to be honest, myself and my co-founder, Tobias, who worked with me at Prosper, we took a mental note. We really wanted to understand how to solve that problem of healthcare payments and healthcare affordability. We just didn't execute on it as part of our Prosper experience. At Prosper, I was chief business officer, and after 4 years, I left the company and started Beyond Finance, which is now a pretty successful debt settlement company. Again, there's definitely a theme in my focus of trying to eliminate debt. At Prosper, we were giving debt consolidation loans, which is basically people trying to consolidate major few credit cards into one simple loan. And then I was trying to tackle debt from a different perspective of trying to reduce people's debts by doing debt settlement. And here we go. I came back to San Francisco and met up again with Tobias, my co-founder and COO, and my CTO from Beyond Finance. And together we decided we're going to take this head on. And we thought we were the right team to tackle that problem. And I have to say, the experience so far has been overwhelming when it comes to not only the traction we're getting, we're growing very fast as a company. And this year alone, our growth rate is going to be around 5,000%. If you can imagine that, it's pretty chaotic. But the type of investors we were able to attract into the company and the kind of talent, I mean, we were very fortunate in our ability to attract a great talent. And I have to say, I mean, I would like to say that, we attract great talent because of my ability to sell the company to talent. But I think a lot more than that, it's the mission. It resonates with a lot of people. We're doing very well by doing something great, something positive. So it's fun to know that you're building a successful company that is doing good in the world.
Yeah. So it sounds like you took the sort of typical track startup, raised a little seed money, and then maybe a round of funding from the VC community. Is that sort of the roadmap?
Yeah, we've done 2 institutional investment rounds already by great investors, seed and A. And yeah, we're getting, like I said, a lot of traction in the business. We just raised our A round late last year by Signal Fire, which is a great, fantastic VC, and 7Wire, which is another healthcare-focused investors. Very fortunate to have this type of support. And we're using the capital to really grow the company. Essentially, we're building a very large operation, and growing a company or managing a company in such hyper growth is you keep breaking everything all the time. So this is kind of the challenge we have, is that we're growing so fast. We need to hire more and scale the business to a point where it's on a good footing. But we're on the right track. I'm feeling very good about what we're doing.
Okay. Well, I can't not ask a question about basketball, being that we're in the middle of March Madness and NBA is starting to wrap up. So did you play center in basketball?
I was a power forward. I'm 6'8", like I mentioned, I believe. And I was a power forward. Yeah, I wasn't tall enough to play center, but yeah, I mean, I'm following obviously the NBA. I'm a big Warriors fan. I live in San Francisco, so that's pretty natural. And since I did not go to school in the United States, I don't have my own alma mater, but this year I think Coach K deserves a championship before he retires. So I'm going to be all in for Duke. So,
well, very well may happen.
Yep, I can see that.
Yeah, it's been fun to watch. When I grew up, if you were 6'8", where I grew up and played basketball, you were a center. I mean, that was just...
Funny enough, in Israel too, but then a lot of American players from the NBA came to play in the EuroLeague. So that changed the dynamic a little bit for me, because then I wasn't as tall as I thought. Because Israel is a small place, only 8 million people. So being 6'8" means something, but once you playing pro, you're playing against a lot of NBA players. Like I played against Bob McAdoo and Daryl Dawkins. I mean, I'm old. I'm 52, right? So different generations. Funny enough, you don't see a lot of centers anymore in the NBA. It's the game changed quite a bit.
Yeah, that's true. That's true. I do remember being in high school, and I'm 52 as well. So I remember in high school, we played against a team who had a kid who was almost 7 feet in high school.
That's tall.
And so we practiced, our scout team, the guy that played center held a broom, and he used the broom to pretend like he was blocking shots as a 7-footer. So anyway.
That's awesome. That's
a little
great.
Side story. Well, what are some things that you're passionate about? You know, maybe one work-related thing and one personal thing.
So let's start with work. I'm very passionate about solving real problems. I mean, I think one thing that my career has allowed me to do is to really take some pauses after very condensed and extreme kind of hard work in one company, and then between companies you can think. And I think that advantage allowed me to really focus on problems I'm very passionate about and technological solutions to these problems. So I tend to focus more on the problem and the solution rather than the business. And for me, it tends to produce better results. I mean, typically, you care about the problem because you really obsess about it. And as a big believer in technology and transformative technology, solving problems that way is something I'm very passionate about. Typically, it works from a business perspective as well, because if the problem is large enough, then it makes a big difference. And, I think that Payzen is an example of that. Maybe something that is becoming very popular in the United States. I'm talking about my own personal passions. I'm, for the last 30 years, pretty obsessed with Formula One racing. I don't know if you watch or not, but I'm very happy to see that the US is finally getting to a point where it's becoming so popular because of the Netflix series Drive to Survive. And there's now 2 races in the United States. So I'm a big Formula One fan for many years now. And I would like to think of myself as an expert because, again, it combines not only a very competitive environment, but a lot of technology and very innovative solutions to powering a car and aerodynamics and strategy. So I find it fascinating as a sport.
I thought for sure you were going to say basketball.
You see, I needed to surprise you.
Very good. Very good. Well, this whole fintech space that we're in and payments and kind of the areas that we've been in our careers, it's really, like you said earlier, fintech 1.0, but now we're where fintech's a very mature market to be in. There's a lot of kids coming out of college that are looking to start a career and they look at fintech or payments as a viable option for a career. My question is, what advice would you give them coming out of school? They're looking at the fintech space. What would you tell them they should do to be successful?
It's interesting. Growing up in the 70s, 80s, we have a different perspective as to what's broken in financial services because think about it, a lot of banks did not evolve since that era. For kids who grew up in the 2000s and kind of graduating now and thinking about their career, they grew up in a totally different environment where it's a lot more digital, mobile. They take a lot of things that we think are magic for granted. I think that, if I was somebody who's just starting his career right now, what I would focus on is definitely digital currency and money movements around the world. I think that this is still an unsolved problem. Even with cryptocurrencies, it's not as scalable as people think. I think that digital currency is going to be the future. I think governments are going to move to digital currency. Having a much better ledgering and a lot more technologies around it to make it safer, compliant, and safe for everybody to use and simple for people to use will be the future. I think that money is going to be very different than what we think about today, and especially people in my generation thought about.
Yeah, I think you're dead on with that one. Well, Itzik, we've covered a lot of ground about you and your background and obviously Payzen and the company that you've built. Is there anything else you'd like to add before we wrap up?
Yeah, if you're a smart individual who is passionate about solving healthcare affordability and doing good in the world and want to join a rocket ship, hiring is not easy today. And we're looking for smart people who are passionate about this problem. So join the team because we're growing fast and we're looking for smart people.
What's the best way for someone to learn more about the company?
Just go to payzen.com and go to our jobs page. There's a lot of information there and open positions. We're always looking for additional talent. And again, you probably know this better than me, but hiring today is extremely difficult. So we are hiring all over the country, not just in San Francisco.
Okay, great. Well, thank you so much for being on the show today. I know your time's very valuable. I really appreciate you being here, and I enjoyed our conversation very much.
Same here, Greg. I appreciate your time. I really enjoyed it.
Great. And to all you listeners out there, I thank you for your time as well. And until the next story.
Thank you for joining us this week on the Leaders in Payments podcast. Make sure you visit our website at leadersinpayments.com, where you can subscribe to the show and where you'll find our show notes. If you enjoyed listening, please share on your social channels as well.